All right, futures mix as we get another big downgrade from a global Wall Street bank. 30 minutes until the start of trading. I'm Matt Miller.
And I'm Danny Berger. Sonali Basak and Katie Greifeld are on assignment. Bloomberg Open Interest starts right now.
Coming up, as President Trump tinkers with tariff timing, another strategist cut his S&P 500 target. Barclays now sees the index at 5,900 by the end of this year. Meanwhile, Dollar Tree is having a sale. The discount giant is offloading its Family Dollar chain a decade after buying the business, and NVIDIA weighs on futures as Chinese regulators curb the use of its best-selling chips in that country, which has rolled out 10 AI product updates or releases in the past 2 weeks alone. Let's take a look at where markets are trading right now. You saw futures mixed during surveillance, and they haven't really changed right now. S&P futures are a little bit higher. NASDAQ futures are a little bit lower. NVIDIA's weighting on these indexes matter. It weighs a lot more on the NASDAQ than it does on the S&P. The U.S. 10-year yield right now at 4.35 starts to rise now almost 4 basis points as investors sell off that debt. But in terms of the stocks we're watching, it's really NVIDIA. That's the big one. Sales in China could be in trouble after that country reportedly introduced new energy efficiency rules for chips, and that hurts sales of their H2O chip, which is their best seller in China. Danny, what are you watching?
I'm watching Dollar Tree this morning. You mentioned it, Matt. Look, it had earnings, it beat, but that's not necessarily why it's moving. It's up 1.3% in the pre-market train. It's selling its Family Dollar chain for about $1 billion. Just to be clear, that is a really steep discount for them. It paid nearly $9 billion a decade ago. But Dollar Tree has been trying to restructure. They've been trying to right-size the business. Matt, this is just another piece of that.
All right, and we are looking at some breaking news just rolling in from Bloomberg. Rivian is spinning out a business that will develop small electric vehicles designed for short trips. It's part of a multi-year project to expand beyond standard cars and trucks. Bloomberg's Craig Trudell joins us from London, where he oversees all of our global auto coverage. And Craig, this is fascinating. So it's, I guess they're calling it a micromobility unit. They've been working on it for a while, and they're teaming up with a venture capital company to give it, what, $100 million in funding?
That's right, $100 million to work with, and honestly, this sort of reads to me like a throwback to, I don't know, like something like 5 or 8 years ago when you were seeing car makers sort of left and right trying to launch these micromobility efforts. We've seen a lot of those efforts kind of fall by the wayside. I think this is an attempt on Rivian's part to try and do what others have failed, and do so in a way that avoids any criticism of kind of taking their eye off the ball, because they themselves have, quite a bit of issues to work through with their EV manufacturing and scaling up that business. So you spin off this micro mobility unit, give it a small bit of money to work with, pair it with a VC firm, and see what you can do, see if you can succeed where others have not to this point.
Craig, you said give them a small bit of money to work with. Presumably, it is expensive to launch a venture like this. They have some liquidity. They have some liquidity from Volkswagen, for example. How patient will that capital be, and will it be enough?
It's a great question. I mean, I do think that this is, of course, going to be a lot less costly than developing, say, an electric truck or SUV. Is in Rivian's portfolio and its main business, but it is not cheap to bring even smaller little micro cars or say an electric bike. These are projects that are sort of pale in comparison to full-blown passenger cars. But that's part of the challenge that some of these companies have had is you really need to get costs in line, and that's something that Rivian has had issues with its trucks and SUVs and its delivery vans. In order to get people into electric vehicles, we're going to need to make them more affordable. And I think just sort of across the board in the U.S. and Europe, we're seeing a lot more challenges with pulling that off than you're seeing in, say, China.
Craig, thanks very much for joining us. Craig Trudale, they are covering cars for us out of London. It is worth noting that Rivian stock, since it launched and started trading in November of 2021, is down more than 80%. And if you look at it compared to the NASDAQ or Tesla, it's taken a brutal beating. Let's get back to Dollar Tree's sale of Family Dollar. The company's CEO saying, quote, "This is a major milestone in our multi-year transformation to help us fully achieve our potential." Dollar Tree bought Family Dollar for $10 billion in 2015. Joining us with more on this is Bloomberg's Crystal C from our deals team. So, Crystal, what do we know about this? I guess they're giving up on Family Dollar.
So they're restructuring the business as a whole. So Dollar Tree acquired the Family Dollar for a huge amount of money, and now it's like a fraction of it. What we know is that Dollar Tree itself is also going through a lot of restructuring. They're closing stores in underperforming locations. That's all because they're facing a lot of competition for that more affordable category from the big players like the Walmart, like the Aldi. So it's a really tough business to be in. And you would think that like in an economic downturn, these are still like resilient businesses, but I think it's proven now that it's still really hard to run affordable retail business.
Does that speak to why they took such a big loss when selling this from something like 10 billion to 1 billion?
I think after 2008, the dollar store category was doing really well. That's how we saw these consolidation, that Family Dollar, Dollar Tree came together. But then, you know, that category, when it comes to coupled with e-commerce, coupled with, you know, the big retailers, the non-traditional grocer going into kind of different categories. Walmart has been adding more and more categories into their stores. So all of that is kind of contributing to why this number is such a small number compared to 2015.
Kristen, we talked so much at the end of last year, post-Trump election, about a boom in M&A for 2025. How much have you seen so far?
Not that much, to be honest. There's still a lot of worry that the economic uncertainty will make it very difficult to not only announce a deal, but to close the transaction. Regulatory remains an issue for deal makers. But then we still see a little bit of these retail take-privates. Walgreens was one, as another struggling challenge retailer. And now we have Family Dollar. So there are some deals getting done, but it has to be a very, very specific condition.
Feels like a drip feed. Crystal, thank you so much. Crystal C there on our deals team. Let's take a look at some of the other earning movers today. Bloomberg's Bailey Lipschultz is here to break down those stocks for us. Bailey, what you got?
And Danny, let's start with Can't Stop, Won't Stop. GameStop rallying double digits this morning. They did report results that were better than expected. They did beat on profitability, though there really only are a few analysts that still cover the former meme stock, still is a meme stock. But really, everything that's sucking up the oxygen for GameStop is the fact that they formally announced their board is okay with them storing Bitcoin as part of their treasury. So this has been long rumored and speculated. Keep in mind, a number of months ago, Ryan Cohen actually got the approval to go ahead and pretty much do whatever he wanted with GameStop's cash, whether that was investing in stocks, ETFs, or cryptocurrencies. So now they will formally embrace this Michael Saylor vision of companies keeping their cash instead of in some of those longer short-dated T-bills, actually in Bitcoin. So that's why you're seeing the stock up 11%. But if you look really on a 12-month basis, still only recouping some of the losses year to date. And even further back, if you go back to the mania in 2020 and 2021, still a drop in the bucket relatively, but solid results from that company. And Ryan Cohen, who heads GameStop, actually founded Chewy, another company we're keeping an eye on, beating expectations in the fourth quarter, laying out guidance for 1Q net sales better than analysts were penciling in. The big thing when you look at analysts' reception to these results is that this was a third consecutive quarter of net customer additions that are growing at a rapid pace. And that's really signaling to the buy side that this is a business in a category that is still continuing to improve. And we're seeing consumers more than happy to spend up on their pets, whether they're buying dog harnesses, foods, or medications. CEO talked about their strength in kind of automatic deliveries and that playing out and showing up in the business. The stock has more than doubled in the last 12 months. And a quick preview on Jefferies. We are in earnings season for retail, but we are gearing up for the big banks going to report. Jefferies will have earnings after the bell of the day, down incrementally, but we will get a real read on what some of the smaller boutique banks are thinking. As Crystal mentioned, deals, IPOs, not quite what many were anticipating with the Trump administration. So it'll be interesting to see what they report and how that can be kind of read through to the bigger banks when we get those results in the coming weeks.
All right, Bailey, thanks very much. Bloomberg's Bailey Lipschultz running us through some of the movers. If you look at futures, you can see the S&P 500 futures are barely up, and NASDAQ 100 futures are barely down. Danny, this is really interesting because NVIDIA tends to move the indexes on which it's listed. It's only worth 6% of the S&P, but it's worth 8% of the NASDAQ, so it's a bigger weight there. And then yesterday we saw these communications companies is how they're classified, right? Apple, Meta, Google, all to the upside. And it'll be interesting to see if they can do it again today with Apple's Tim Cook touring a university in China.
It will be interesting to see if that adds to the AI allure of what they're trying to do at Apple. But Matt, it's such a good point that when you see up days like yesterday, it was led by tech. The Mag 7 had the best 3-day run since the Trump election. Meanwhile, equal weighted was down. Meanwhile, small caps were down. So if we do get another rally, Matt, maybe we'll just go back to crying out this market's too lopsided. Tech is leading us too much.
By the way, we have Tesla shares down 1%.
Yeah.
But Dan Curtis, our chart guru out of London, was sharing a chart with me. I may show you all later on in the program that proves when Tesla's moving up, the fanboys pile in. So retail investors really go for that stock, whereas NVIDIA, it's not really the same case.
For sure.
We're going to talk about NVIDIA when we come back. Those shares down slightly after reports of those new energy rules out of China, putting a damper on H2O sales. That's next. This is Bloomberg. Let's get out of high interest to look at what's making headlines around the world. A federal judge in Texas orders Boeing to stand trial on June 23rd in a criminal case tied to 2 deadly crashes involving their 737 MAX aircraft. That is a stunning turnaround to the story we had been following. Qualcomm launches a global antitrust campaign against ARM Holdings. The complaints to regulators on 3 continents argue that ARM's restrictions are hurting competition and restricting access to Qualcomm's technology. And Apple's Tim Cook visiting the home of AI sensation DeepSeek. The CEO spent some of his time and Apple's money in China to speak with the next generation of artificial intelligence developers. Danny?
Yeah, Matt, I find this so interesting because we did come from a period where tech companies were trying to cozy with the U.S. Now we're seeing them flock to China, and China supporting tech too. It's a completely different environment.
Yep.
And AI,
a lot different than you may have expected.
A lot of things are different than we expected at this point in the year. And look, maybe what's not surprising is that AI is taking center stage, but it's doing so in China this week. Alibaba has announced a new partnership with BMW. They've teamed up to produce AI for cars in China. NVIDIA shares, those are also under pressure. Matt was showing you this at the start of the show. The FT reporting that China's energy rules for advanced chips could weigh on sales. It's a lot to wrap up. Let's do that with Mandeep Singh of Bloomberg Intelligence. Mandeep, I want to start on this NVIDIA story. Is this China hitting the U.S. where it hurts, directly targeting NVIDIA? And what would be the consequences for sales?
Look, I think what is happening in the AI market right now is there has been a shift from pre-training to more inferencing and reasoning. And what it has done is it's alleviated some of the undersupply that we had with NVIDIA chips. So now we have more chips on the inferencing side. And the real constraint, if you ask, folks in the industry right now, is power. So I'm not surprised that China is calling out power as an area of focus, because everyone is trying to optimize on power and make sure they're using efficient chips, because that is emerging as the real constraint. And look, they have trained the latest version of the Ant model on some Huawei chips, it seems. So clearly they're trying to reduce their NVIDIA dependency, given the export controls restrict, the latest NVIDIA chips being available in China.
There's a great story on the Bloomberg terminal by Saritha Rai and Yaju Sun about China really flooding the zone, right? Over the last 2 weeks, 10 major updates or releases in the field of AI have been put out. Are those companies gravitating towards other chip makers than NVIDIA? Are they using different suppliers?
Yeah, look, I think every model provider is trying to show that they have capabilities which are comparable to, the models that are available here, like OpenAI, Google Gemini, et cetera. And all these model providers are, using chips that are not the latest NVIDIA chips. So clearly, they have been able to catch up in terms of functionality, and some of it is really optimizing the algorithm. What DeepSeek showed was really the mixture of experts approach. So all these things are done more at the software layer than at the chip layer. But in the end, there is no doubt that they are trying to flood the market with chatbots and models that are comparable. And Gen AI is being deployed. I mean, whether it can be monetized the same way it is being done here, that question remains to be answered. But clearly, it is getting deployed in a lot of their internet apps over there.
Well, Mandeep, it used to be that the U.S. was where all this advancement was happening, and tech companies around the world wanted to get their hands on U.S. technology. But what we're seeing now is not just the zone being flooded with AI, but BMW working with Alibaba, Tim Cook going to universities in China to speak about the next generation of AI builders. Has the script flipped? Is it now that Chinese tech and Chinese innovation that the world wants to lean on?
Yeah, especially if you're a company that wants to sell your products in China. I mean, for Apple to have, the latest Apple Intelligence in China, they probably have to use a large language model provider that's based in China. Same thing for BMW to operate their cars with, AI functionality. They have to use a local LLM provider. So I'm not surprised that they are doing these partnerships early on, because Gen AI use cases are proliferating, and it will trickle down to, our day-to-day devices and products that we use. So I think that's what they're looking for in terms of partnerships and really liaising with the LLM providers right now.
Mandeep, great to get some time with you. Mandeep Singh there of Bloomberg Intelligence. You can find his research by clicking on any of the stocks that he covers and then typing BICO, B-I-C-O. Coming up, less than 12 minutes to the opening bell, we're joined by Moneta's Aoifinn Devitt on how she'd put money to work in this uncertain environment. This is Bloomberg.
A month or two ago, we could have dismissed it as pretty much only consumer sentiment. We could have said this is pretty much driven by a political division. It's not something that is broad-based. It's just a couple of surveys, just a couple of soft data, particularly on the consumer side, and it's driven by one particular thing, so you can dismiss it. What's changed, I think, now is we see a much more sort of broader-based slowdown among all the soft and the survey data. I do fear that we've seen too much damage, and especially too much broad-based damage in the survey and the soft data in order to just dismiss it as a one-off.
That was one of Wall Street's newest bears, HSBC's Max Kettner, speaking to Bloomberg Surveillance after his double downgrade of U.S. equities. They were a buy, now a sell. This morning, Barclays is adding to the alarm, slashing its S&P 500 price target by 11%, down to 5,900 from 6,600 for the year end. The strategist at Barclays expecting tariffs to weigh on upcoming earnings and contribute to a material slowdown in U.S. activity.
Well, let's get another take on this. Joining us now is Moneta Chief Global Market Strategist Aoifinn Devitt. Aoifinn, great to see you. So we have more downgrades coming for the market, but JP Morgan and Morgan Stanley say that the worst is behind us and a rally can take form. Which side do you come down on?
That is a bit of a blow, a double downgrade. I have to agree. This is the time when we, in working with our clients, are really getting back to base principles. So we're going back to our investment beliefs, which is around a long-term view, diversification, rebalancing, and not being too tactical. I heard a great expression recently around the Hall of Fame of market timers being quite empty. We know it's not easy to time markets, so we are encouraging our clients to stay the course and dollar cost average in, and really just rely on the broad-based exposure that we've built for them.
I wonder if things look different even from a European point of view. I noticed that some of the more bearish banks have been out of London, have been out of Switzerland. Is that the case? Can you, I guess, see more clearly from Europe that the U.S. is going to slow down, or do you have a bias towards Europe because you want those stocks and that economy to do better?
That is a fascinating insight, I think, and probably a very interesting point. Certainly the idea of U.S. exceptionalism probably is strongest from the U.S.-centric banks and when we're based here. And that has only been reinforced by the outperformance of the U.S. for really 15 years and the outperformance of the dollar. So all of that has reinforced this belief. I do think outside Europe, there has been no, I'd say, lack of reality around the challenges facing Europe, sluggishness of economic growth, the regulatory overhang, and the real geopolitical pressure. And certainly I would say in Europe, probably the Trump administration is one of the most keen topics of conversation. I've heard it talked about just as much there as in the US. So I'd say they're very focused on the US and their position relative to it. I'm a little surprised at the underweights only coming out of Europe. I think there is a reality check going on globally. We can see that in consumer sentiment. And maybe there's a sense that there's a sense of the greater potential of European stocks from the European banks. But I would expect to see this kind of fall off in sentiment permeating globally.
All right, Aoifinn, we're going to hold you over. You're going to stick with us through the market open. But, you know, Danny, it's interesting because we've seen UBS so bearish, because we've seen HSBC with the double downgrade, because we've seen Barclays out lowering its price target. You notice that on the continent and on that, you know, in that tiny island nation, you see real bearishness. Whereas here, you know, in the heart of global financial markets, I guess, at least from our perspective, on Wall Street, Morgan Stanley and JP Morgan have said, look, it looks like bottom may be in.
I love that you point this out. I think this is so interesting. And honestly, it's hard not to look at this and just be like, is there some inherent bias that if you're here in America, you understand the resilience of the consumer, of companies, and maybe you don't see that as much if you're looking at it from further away. Yeah,
I also think it's interesting in the rotation we've seen out of the U.S. into Europe, European houses are more likely to be super pumped up on the idea that they're going to borrow hundreds of billions of dollars and spend it on defense, but that takes time. We've seen the rotation happen with financial investors. Now let's watch the money come out of government coffers. A check on futures ahead of the opening bell. We still see a bit of a mixed trade here. We're back with the open in 2. Moments away from the start of trading, this is Bloomberg Open Interest. I'm Matt Miller. We are looking at futures now down on the S&P 500, though they weren't up very much either. So bouncing back and forth between gains and losses. NASDAQ futures continue to move lower as the weight of NVIDIA pulls down those contracts. And you can see Russell 2000 futures gaining about 0.1%. You hear the opening bell at the New York Stock Exchange. Intest Corporation, which is a horrible name, ringing the opening bell. That stock is down 30% in 1 year, down 60% in 2 years. If you stuck with it over the last 5 years, you're good. It's up 5 times, but it's only less than $100 million company. Down at the NASDAQ market site, NEONC. I'm not exactly sure how to say it because it's a direct listing today. It's a company that develops drugs with different kinds of I guess, injection modalities for intracranial malignancies. All right, that said, let's take a look at where stocks are trading right now. You can see that the live trade, this is the cash trade, looks a heck of a lot like futures did. In fact, almost exactly like futures did. And I think it'll be interesting to test whether or not those communications companies like Apple, Tim Cook in China, like Google, like Meta, can carry the day again as they did yesterday while NVIDIA is down. It was down yesterday, but the S&P still gained. It's down today, and it's a big drag on the NASDAQ, down about 0.25%. We're also watching some smaller stocks in an M&A story. Dollar Tree is selling its Family Dollar chain for about $1 billion. That's a steep discount to the $9 billion that it paid for the company in 2015. So hold a company for 10 years and lose 90% of the value. That's not really a great investment.
I'm still getting over you dissing these companies' names, ringing the bell, Matt. This is their day. This is their day, and how dare you put them down? All right, speaking of being put down, here's a stock That's on the downside today. This is my attempt to make an elegant segue. NVIDIA down 1.7% in the cash trade. Sales in China could be in trouble. China reportedly introducing new energy efficiency rules for chips that could eat into their sales. We don't know if the ban will indeed be enacted, but it could be bad news for NVIDIA, Matt.
All right, NVIDIA is one we often look at. Tesla is another. Why not look at it now? The automaker was downgraded by Mirai to a hold from an accumulate, so basically no longer a buy there. But Tesla buyers of the car, not the stock, in Canada will no longer be eligible for electric vehicle rebates following an order by the transport minister. This is just one more example of governments using companies as pawns in the global trade war. Bloomberg's David Welch joins us now from Detroit to talk a little bit about Tesla. And David, it's been obviously an incredibly volatile stock even before Trump's trade war, but I guess it's taking another hit now up north.
That's right. And look, to be clear, the Canadian market is not that big, but it's just another area where Tesla's sales could be eroding here due to the politics of the day, right? I mean, to some degree, American buyers are turning away from Tesla and European buyers as well. You've seen some protests and so forth in Germany. And it's always hard to quantify that because you do have a Model Y changeover right now, which is cutting production. But, at least on the margin, this stuff is hurting Tesla's sales. And Tesla sales growth was already slowing down even before Elon Musk was camped out at Mar-a-Lago and well before he was the head of Doge, the government efficiency ad hoc unit that he's running. So all this kind of conspires to eat away at whatever sales growth they had, which means all of the value in the stock, if you're looking for growth, has to come from his AI and autonomy play. And I think the jury is still out on that. Investors, if they're selling the stock off because EV sales aren't doing great and there are economic headwinds potentially for cars, that says they don't have a lot of faith in that yet either, and they want to see more proof points before they invest.
Dan Ives of Wedbush, David, has been calling now for some time for Elon Musk to better balance his duties with Doge and those at Tesla. It's sentiment that's been reflected by others, too. Is there any sign that that's getting through to Elon Musk? Has there been any movement with how he splits his duties between the companies he runs and his government jobs?
There's been a concern with Elon Musk for a long time because he's got SpaceX and he's got X as well. He's got a lot of things to run, and look, he clearly spends a lot of time engaged with politics and government. And look, it's not clear that really either way that he is kind of redirecting his energies and his focus on Tesla as the stock falls, as sales soften up. But no matter how you look at it, running Doge along with these three huge companies that he runs, it's just another big responsibility and something that pulls him away from this business that investors aren't completely sold on at the moment.
David, thanks so much for joining us. David Welch is our Detroit bureau chief talking to us about Tesla. Still with us is Moneta chief global market strategist Aoifinn Devitt. Aoifinn, what's your take on this trade war and how it turns out? I mean, do you trade it or do you set your chips and then leave them on the table?
Well, great question. I mean, this new regulatory oversight and new rules coming whether from China or Canada, just another example of the quiver of uncertainty that is facing investors today. It is impossible to predict. The one thing we know about regulatory backdrops is that they have to be in some way to have some clarity to them and some predictability in order for investors to trade them. We can see that there's absolutely none of that today, and the same goes for the tariff regime. So I would say what we do is we try to have that global portfolio, because we know that globally, not every company is going to be similarly affected by the tariffs. In fact, the non-US multinationals are probably somewhat insulated from that. It's the US multinationals that might have the most to fear. And that, again, this is, again, justification for having a well-balanced portfolio. So there is absolutely no predictability. And I think that is why the consumer sentiment is as low as it is, and why executive C-suite sentiment is as low as it is. It is difficult to predict CapEx and very difficult to look to the future with this uncertainty hanging over.
Even with that uncertainty, stocks aren't that far below the highs. And Bank of America also put out that their customers saw the biggest inflow. They put the most money into equities last week of 2025 by a wide margin. Is there a risk that come for April 2nd, that we are asymmetric going into it, that the bigger risk is to the downside, considering that equities have, for the most part, held up despite the sentiment?
It's interesting. The April 2nd date, I've heard that discussed as being perhaps positive news that's on the horizon there. And that's perhaps what markets are sensing at the moment and why they're behaving a little bit more resiliently than we would have expected. There is a juxtaposition between the retail investor and the institutional investor. The institutional investor seems to be rebalancing, pulling money out of US stocks and going back into the non-US holdings that have been unloved for some time. We also know the other factors at work is the large amount of money in money market funds that are sitting there earning decent money, but looking for that risk trade. We know inflation is still stalking out there and that money market fund and their return will not do that well in a higher inflationary environment. We don't think that beast has been slayed yet. So I would say it's that risk-seeking behavior, the FOMO, and just the news flow around AI. It's very hard to resist for retail investors. We still have meme stocks that are performing well. We still have the discussion around AI spending. So I would say that's what Barclays is picking up in terms of the flows. And I would actually be looking more for an upside surprise on April 2nd than a downside surprise at this stage. We were wondering whether the Trump put was alive and well. And it seems from the last few days that there may be life in that thing yet.
I want to ask you about financials, not least because Jefferies is out with earnings after the bell, and we're going to preview that later on. But if you look at the KBW Bank Index, it's taken a big hit, to be fair, but it's up again today, and it continues, I think, a 9-day winning streak, maybe its longest winning streak ever. Yet to catch up to levels that we saw at the beginning of the year. But what's your take on financials?
Well, financials were expected to have this great tailwind of less regulatory oversight from the new Trump administration. That took a little bit to kind of play out, and we certainly don't know yet the state of the regulation that's on the cards there. But I would say that given we've seen trading volume been much higher, M&A has been generally robust. We haven't seen the IPO climate pick up, although we do have a sense that that's CoreWeave, et cetera, that's likely to be at least some life in the IPO market. So I would say that actually stacks up quite well for financials. They are perceived as defensive stocks that will do well in a rotation into defensive stocks and away from higher tech. And equally in Europe, unloved for so long, and financials have been doing reasonably well there with the expectation of a bit more economic growth and a resurgence of spending. So I would say I would be quite optimistic around financials at this stage. We haven't even seen the regulatory change come.
Maybe the animal spirits are coming back, up 10% over the past 9 days. Aoifinn, thanks so much for joining us. That's Moneta's Aoifinn Devitt. Now, financials are one of the sectors on the move. Let's take a look at some other stocks on the move. Joining us now is Bloomberg's Denitsa Setkova. And you're looking at GameStop earnings, but maybe that's not what's moving the stock this morning.
Yeah, actually, the earnings report is pretty bad. We're seeing a 28% drop, but we're actually seeing the stock up 14% today. This is the biggest jump since December. And it's something we've watched other companies do. It's allowing Bitcoin to be part of their treasury reserve, which is obviously a method that's been popularized by Michael Saylor. We saw Strategy, formerly known as MicroStrategy, jump more than 2,000% since 2020 after they started buying Bitcoin and using it as an inflation hedge. Now GameStop is suggesting to do the same, and there is a lot of optimism based on that. Even though we got a pretty bad earnings report, the stock is up and is having clearly a lot of retail supporters being excited about it once again.
The stock on Chewy, I think, at least was down in the pre-market. If we pull it up, we'll see. Wow, it's bounced higher. That's awesome. So Ryan Cohen, there's a connection here, right? Ryan Cohen, who's the CEO of GameStop, I think also owns a substantial stake in Chewy. What's the story with their earnings?
Yeah, for sure. Something we've seen is that this is obviously one retail sentiment name, but what we're seeing here is actually very good news from their earnings. The company has reported fourth quarter sales that beat estimates, and what we heard from the CEO is actually this is well above their high end of estimates. So this is a really good earnings report. We hear Piper Sandler and Bloomberg Intelligence analysts are very bullish on the company, saying that there is a lot of demand for those supplies. One thing they do is they've really grown their customers, and they also have a auto delivery service that's been very popular, and that's really helping the stock. The stock is not up a lot this year, but last year it had a 40% jump. So clearly there has been a lot of interest in this company.
All right, Danica, thanks so much for joining us. Danica Sakova talking us through some of the stocks that are moving just after the open. Coming up, we're going to talk about more. Copper miner Freeport-McMoRan jumping after President Trump signals that tariffs on the metal are coming sooner rather than later. That would help them raise the price for their product. This is Bloomberg. You're watching Open Interest.
Let's get you some top calls this morning. Some of the analyst action in focus. First up, Trade Desk getting an upgrade to a buy at CRA. The analyst says that the valuation is very enticing and sees the ad tech company benefiting from growth drivers. Next up, we got Summit Therapeutics for you. Those shares up 0.5%. Upgraded to a buy from Citi thanks to optimism on the biotech's cancer drug. The analyst over there saying that the drug could be a, quote, paradigm shift. Finally, we got CarMax for you. That being upgraded to a buy at Stephens. Those shares up 2.33%. The analyst over there saying that there's an attractive valuation and believes that CarMax will marginally benefit from most tariff scenarios, at least in 1 year. So rare company, Matt, that can do a little bit better off the back of some more car tariffs.
Yeah, absolutely. Let's talk about tariffs a little bit more. Copper is higher, including copper miner Freeport-McMoRan, after a Bloomberg scoop that U.S. tariffs on copper imports could be coming within weeks rather than months, as had been anticipated. Last month, President Trump directed the Commerce Department to open an investigation into the potential of copper tariffs. Trump appeared on Newsmax yesterday to talk about the tariffs poised to take effect next Wednesday.
Not too many. Not too many exceptions. No, I don't want to have too many exceptions. Yeah. We're just going to be reciprocal. In fact, I'll probably be more lenient than reciprocal, because if I was reciprocal, that would be very tough for people.
Here now with more on the impact of copper tariffs is James Atwood, Bloomberg's senior commodities reporter in Santiago. And James, of course, you're there because so much of copper is mined in that region. What is it going to look like getting that metal here in the U.S. where companies need to buy it and work with it?
Well, we've seen that the prospect of tariffs in the U.S. has spurred a record amount of copper being directed or shipped to the U.S. from Latin America, places like Chile and Peru, but also being redirected from other parts of the world and stocks taken out of warehouses elsewhere, draining stocks basically to get that metal to the U.S. Ahead of the tariffs. That's part of the reason why there's a very large difference between New York copper prices and the LME prices, which is a lucrative prospect for traders. Now, if those if the tariffs come in sooner than people thought, as you mentioned, the Section 232 investigation, if that takes a lot less than people thought, all that copper on the water or the copper being prepared to be shipped to the US may, or some of it may miss the boat. Certainly the window may close before people thought.
I'm so obsessed with this, James, because it's not just copper, it's gold. It feels like there are commodities just being flooded into the U.S. on planes, on ships, everywhere that they can find them. So they're trying to bring copper into the U.S. Are there companies here like the Freeport-McMoRans of the world that benefit from this, that already have a presence in the U.S. and will do better off the back of it?
Yeah, Freeport is probably the most obvious case. It produces both from its mines, and it has a copper smelter. Also, Rio Tinto has mining operations and a smelter, and there are other companies as well. There are also some projects apart from the tariffs on copper. There's also measures underway to incentivize mining projects to boost local production. So anyone who has assets in the US now, either operating or idled, stand to benefit.
James, thank you so much. Bloomberg's James Atwood, senior commodities reporter for Bloomberg News. You know, Matt, one time I asked to see the gold under the Bank of England, and they told me I couldn't go because if I had seen it, I would become a kidnap target because someone would know that I know where it is and kidnap me to take them to it.
Everyone knows where it is.
I know, but like, I guess how to get there, I'm not certain. That was the excuse they gave.
I love the idea that there's gold under the Federal Reserve Building in downtown New York, and that underground vault is right next to the underground trading pits of the New York Stock Exchange. So I've always thought it'd be cool if somebody wrote a movie script about like down on their luck traders who tunnel into the Federal Reserve and steal the gold.
Well, we need to make sure it's there, right?
Yeah, absolutely. So our gold is in Kentucky, though. Our gold is in Fort Knox, right? The central, the central bank holds gold from other countries here in New York.
But again, it's flooding in, it's going there. We need to take a look. We need to audit it. We need to make sure it's there.
I'm all for it. All for the conspiracy theories.
Everyone, invite Matt and us to your gold storage facilities. Are coming up on the show. Elliott sues Phillips 66 in an attempt to boost board turnover. We're going to talk about the activist strategy next on Open Interest.
This is Bloomberg Open Interest. I'm Matt Miller. Quick check on what stocks are doing just about 23 minutes into the session. You can see the major indexes are down. The S&P 500 off by almost 0.2%. The NASDAQ falling further because of the drop in NVIDIA. Come over here with me to look at that big heavyweight stock. Off right now 3.3%. It's worth 8% of the NASDAQ index. Tesla's down as well, 2%. You can see Apple's a gainer, so that helps lift the S&P a little bit, as it is the world's largest company and the biggest weighting on both the S&P and the NASDAQ. I think it's very interesting that Chewy now is down 0.4%. It was off pre-market, came out with earnings. It was up in the live trade for a few minutes. Now it's fallen down again, Danny.
Some crazy volatility. And by the way, Jess Metton writing a great story for Bloomberg. That liquidity has been sapped from this market, maybe why we're seeing so much up and down. Well, let's get you the latest activist investor push. Elliott has filed a lawsuit against Phillips 66, seeking to boost the number of board seats up for election this year. Bloomberg's Crystal C reported on this, bringing us this story, Crystal. So what exactly is Elliott's aim in this?
So Elliott has been pushing for changes at Phillips 66 since last year, or 2023, really. They have shown him the stock, and they're telling the company that you can do better. It's always that, their stock is undervalued, you can monetize certain assets, and this is we're getting into the activism season where corporate elections are getting more serious, and the latest news is that Elliott wanted to make sure that Phillips 66 is running for a director nominee this year, and the company this morning have announced their four. So from here on, we're just going to see if the two can come to some sort of resolution, or does that really go to a full-on election.
You have been all over this activist movement, right? Not only the Elliott lawsuit and Phillips 66, but also Engine Capital potentially pushing for a strategic review of Lyft. And there are other stories, I think, around Autodesk, which makes the software that architects use. So what are the other stories you're focused on?
Yeah, like I said, it's activism season. Everything is getting more serious. This is really the moment where people are deciding whether they want to get aggressive and push ahead with electing their own directors, hoping that they could effectuate change within companies. And Autodesk is a good one. So Starboard actually named their 3 nominee this morning to Autodesk. Like you said, it's a software company that serves software architects. The story here is that
AutoCAD, for example, is one of the programs they make that architects all use.
So the story here is that Starboard has been there for a while, and they've been looking to nominate, and they think the company, after having their accounting prop, could do better, could probably see better board and better management teams. And the same with Lyft. The same thesis is that Engine Capital thinks that they could use new board members and perhaps do a strategic review, which will be very interesting given, that Lyft was such a tech darling not so long ago.
All right, Crystal, thanks very much. Crystal C there talking about all of the activist stories that she's covering for us here at Bloomberg. Take a look at the S&P taking another leg lower. Now down 0.25%, and it is really these communication services companies that are moving lower. They were the ones that were gaining yesterday. Today they're down. Amazon is down. Facebook is down. Google is down. Microsoft is down. Netflix is down, adding to the drop that we see from NVIDIA and Tesla. Coming up in the next hour, Nancy Tengler joins us, the CEO of Laffer Tengler and the CEO of International Paper as well. This is Open Interest. We are 30 minutes into the trading day. Welcome to Bloomberg Open Interest. I'm Matt Miller.
And I'm Danny Berger. Sonali Basak and Katie Greifeld are on assignment. Coming up, 3 days in the green meets its end. Anxiety brews ahead of tariff deadlines. And as markets await more clarity on Trump's tariff plans, the CEO of International Paper tells us how he's navigating the uncertainty. Plus, big bonuses, Wall Street payouts surged last year to nearly $48 billion as industry profits also soared. Now, the Congressional Budget Office releases its estimate for U.S. debt limit deadline today, this morning. At any moment, Bloomberg's chief international economics and policy correspondent, Michael McKee, joins us now. Mike, again, I'm not sure if that data is out at this moment, but what are we expecting, or do you have it in hand?
It hasn't come out yet. We're just waiting at this point for the government to release the data on the internet. But what they're going to be telling us is when they think the X date is, when the government can no longer pay its bills and the United States would essentially be ready to default. So that is a key date for people on Wall Street. It's not necessarily the date that they will default, because everybody's trying to guess at what that is based on spending patterns and tax collection. But it could be an issue for people who are trading, especially in the money markets.
Yeah, we'll see what that date brings us. Hopefully we will get that data soon. Thank you for the setup, Mike. That is Bloomberg's Mike McKee in Dallas. Some other reports seem to suggest that would look like something like the summertime. Okay, let's get a look at some stocks that are moving in this hour. Joining us now is Bloomberg's Nora Melinda. Nora, kicking it off with some copper this morning.
Yes, I want to look at Freeport-McMoRan. This was a company I wasn't familiar with, but this is after a Bloomberg News report that Trump suggested that tariffs on industrial metal could be coming in weeks rather than months. And we did see shares of this company actually higher at the beginning, but we are seeing them trailing into the red now. But this is a really interesting topic, especially as we're thinking about this April 2nd deadline.
I have to say, I will never forget when I was a Cub reporter like 25 years ago, and I realized it wasn't McMoran. It's McMoRan, and that makes it so much more fun to say,
I had to
right?
look it up. I said McMoRan.
Yeah. There's another company that I hadn't heard of, although it's worth substantially less, moving today, Humacyte.
And it's not surprising that you haven't heard of it. It's actually a quite small biotech company.
Penny stock is what we would say.
$2.6 million in market cap, so pretty small here. But it is making a big move here. We're seeing shares down more than 30% in trading today. And this is after it offered 25 million shares at a 30% discount. That's not a good look for a company when we're thinking about investors that are looking for great returns. They actually have shares that are offered via TD Cowen, Barclays, BTIG, and Benchmark among some of those names.
Yeah, I mean, it's going to be moving 30% on a move of like 70 cents. So that's what a penny stock will do.
Okay, it's $264 million.
But it's literally moving 78 cents.
Okay.
Still an important story, Nora. Thank you for bringing that to us and the others. That is Bloomberg's Nora Melinda. Okay, now we have the numbers coming out from the CBO. Again, it is its estimate for the U.S. debt limit deadline. Let's bring back in our chief international economics and policy correspondent, Michael McKee. Mike, I think we have the timing this time down pat. What does the data show us?
Well, what they're saying is we could reach the debt ceiling limit in August or September. August would be the earliest date, September the latest, and it all depends on how much comes in tax revenue and how much the government spends between now and then. One interesting note is that the IRS has been cut back in terms of personnel by the DOGE effort, and some IRS experts are saying that will lead to lower tax collections, which could push up the date. The CBO is not weighing in on that, but it is something to keep an eye on. Right now, Treasury is spending down its general account at the Fed, savings account, as you will, that the Treasury put together. It was over $800 billion. It's now down to $364 billion. So there is only a little bit of headroom left. It does give them some time to work out the debt ceiling and see if they can get it through Congress.
Lower tax collections probably isn't the main concern for most Americans, is it, Mike?
Well, it's not the concern for most Americans.
It's the refunds. It's the refunds, right? How long are they going to take to get out?
Well, they may take longer, but what they're talking about is especially higher income people may be paying less than they should, and we won't collect as much money. That's going to be an issue if the debt ceiling isn't resolved fairly quickly. And that's going to be part of this reconciliation bill. And right now, the House and Senate are far apart on that.
Mike, thanks very much. Michael McKee there in Dallas talking to us about the X date for the debt ceiling. Let's get a quick check on NVIDIA right now. That stock has been a real drag on the indexes, and it continues to move lower, now falling $4.65. So in terms of the S&P, NVIDIA is the biggest drag. It's taking off about 10 points, 13 actually, from the S&P 500. You've also got Tesla falling, Amazon off, Meta down, Microsoft, Broadcom, Google. And the list goes on in terms of the Mag 7 weights. I can't see any of them as gainers today. Let's talk about this with Nancy Tengler, Laffer Tengler, CIO and CEO. What do you think about these big mega tech companies right now, Nancy? I mean, they boosted the market 50% over the last 2 years and have been a huge drag in 2025.
Well, Matt, I think you have to play the long game with the technology and the Mag 7 names, and we think the long game is still intact. But the bears don't get to be in charge very often, so they keep taking runs at these names. You know, we just saw a nice rally last week and earlier this week, and then now we're getting pressure again. And so I think as a long-term investor, you want to step back and you pick your spots. And, there's a couple of the names we've been adding to, but generally speaking, we had been diversifying out the portfolio. We've added some energy names recently, some pipeline names, and we think you just continue to do that. These are still great companies. This is, in the sense that I've drawn the analogy to the 1990s, in one way, this is not the 1990s. These companies have robust balance sheets. The technology, and by that I mean AI and AGI, are much more compelling than eyeballs and clicks, which is what we had in the 90s. And so I think you have to believe the worst of what you're hearing, and that is that, we're not going to build any more data centers, that, DeepSeek is going to take over the world, in order to say, I don't want to own any of these names. And so we've been adding to them selectively, but don't be in any hurry.
Nancy, I love a version of you that's buying NVIDIA, because there were so many days where we talked last year that you were holding out because of just how expensive it is, how much it had run. But looking at NVIDIA's PE multiples at the moment, it's basically in line with where we were December. You had a big run up and then a fall, and then you start to come back. So why are you still comfortable adding on NVIDIA, despite the fact, again, save for the little blip that we've been getting, it's basically where we were before we entered the year?
Yeah, good morning, Danny. You and Manus bullied me into buying it. Every time I go in, you'd ask me. No, what we saw in the summer was a company that is generating still, even though decelerating, very strong earnings growth, and at a price earnings to growth ratio level, it is very cheap. And so what you have to ask yourself is, can it continue? Will it continue, even with slower growth? And we saw this with Microsoft and the cloud business. At one point it was growing over 90%, and now we're at 30. I don't know. I can't feel too tragic about that. So you pick, again, you pick the opportunities, you add to it. We bought some 2 weeks ago, just added to NVIDIA a little bit. We added to Tesla. We added to Palantir. We added to names that really got hammered on the expectation that what we believe about the build out will continue, and that we are pretty much still in early innings.
I saw a chart this morning. 3273 is the number for those of you with a Bloomberg chart library at your fingertips. Just type G #BTV 3273. It shows that Tesla buyers are much more likely to pile in when the stock's going up. That's not the case with NVIDIA buyers. And you've seen that. Here's the chart. Thank you very much, Joe. So glad you're back. What do you think about Tesla here? I mean, it's lost half of its market cap, and yet retail investors are still piling into this stock. Nancy, is a car maker really worth $700, $800 billion?
No, it isn't, Matt, but an AI company and an energy storage company and a full self-driving company probably is. And so this has always been a narrative stock, and it has been driven by retail investors, which is why you don't see the follow through in NVIDIA, because it's more owned by institutional investors. But just think about this. Tesla's up over 15,000% since the IPO in June of 2001, I think, 2000. And the stock has been in a bear market almost 50% of that time. So you've earned an annualized return of 40+%, but you've been in a bear market. So the time to buy this stock is when everyone hates it. We reinitiated when Musk was selling his shares to buy X, then Twitter, and then we've used strength to trim back the holdings. The reason this stock is not in our 12 best ideas or our 5 for 25 is because of the volatility, but you do want to own it for the long term. So if we bought in a couple weeks ago at 240, 225. Am I going to be happy 2 to 3 years from now? Yeah, I think so.
Yeah, buy when others are fearful. I think it goes, Nancy.
I remember I actually remember the IPO in 2010 because I had driven a
2010.
Roadster.
Thank you.
I drove a Roadster with Jason Harper, and I thought it was so cool.
Do you wish that Bloomberg would allow you to buy the stock? Is that a?
That's exactly what I was going to say. Like, I so wanted to buy this stock, and everyone said, they'll never survive. In a world where General Motors and Ford exist, they're going to be stepped on right away if they do well.
But you probably would have been fired, and what a loss that would have been for all of us. So I'm glad that your finances don't reflect you buying Tesla. Nancy, luckily you don't have that issue to deal with. But I do wonder on Tesla, Dan Ives of Wedbush, who is a Tesla bull, to be very clear, and is still long-term likes the stock, he has been arguing that he will have to downgrade Tesla if you don't see a more even balance between Musk's efforts on Doge and Tesla. Not to say that he needs to step away from the government completely, but just at the moment, it's too uneven. How much are you paying attention to Elon Musk's politics, and could that sway you on just how bullish you are on Tesla?
100%, Danny. So, but here's the rub. So remember when he was sleeping on the factory floor and he was on the Joe Rogan podcast,
Production hell.
Yeah, and I just said, man, there were no earnings. This is gambling with our clients' money. We got out and it went up fourfold. Now we had a double in the stock, so call it a Pyrrhic victory. But I think of course it matters. Leadership matters. He showed up last week. The stock rallied. I think on that news, you never really know, but he must be present. And if you read his biography by Walter Isaacson, you will see the value of him being engaged in the company. So I'm not minimizing that. But I do think it creates an opportunity if, in fact, the stock does get downgraded by Dan, who's a good friend. But I'm not going to sell on that news necessarily. I might actually buy more.
Wall Street's best dressed as well. Don't forget. Nancy, great to have you on the program as usual. Nancy Tengler there.
Yeah, that's Nancy, Matt.
Of
Nancy
Laffer,
gets that
Laffer
title.
Tengler. I mean, I think the fashion sense of everyone else just pales in comparison to Dan Ives.
It's like a bright ray of sunshine whenever
I love
he's
it
on set. It's
so
great.
much. All right, coming up, Wall Street bonuses surge to all-time highs. That's next in your Wall Street beat. This is Bloomberg. Getting out of high interest, look at what's making headlines around the world. This morning, The Atlantic published the signal messages that journalist Jeffrey Goldberg received from U.S. national security officials about military strikes in Yemen. Since the publication of the original story, the Trump administration and the FBI have downplayed the messages, stating that they did not contain classified information. BlackRock is integrating complex private investments into its ready-made portfolios for individual investors. The firm calls it a first for the asset management industry, and Wall Street bonuses are hitting new record highs. The average payout last year was over $240,000 per person. That, according to New York City Comptroller, and the total pool hit the largest since record-keeping began at more than $47 billion in Wall Street bonuses, Danny.
All the luxury restaurants in New York about to be flooded with bankers spending that splashy payout. Let's stick with that on today's Wall Street beat, and Bloomberg's chief Wall Street correspondent, Sri Natarajan, joins us now. So, Sri, I guess last year looked really good for bankers.
Yeah, don't forget about the car dealerships as well.
Yeah.
It's not just the restaurants. Look, undoubtedly, the final year of the Biden tenure, as has been the case for much of the last few years, Wall Street has had a very good run, and that is evident in the numbers. It was evident in some of the reporting earlier this year when we got concrete numbers from the biggest banks. But this, of course, is a much more comprehensive report. And when you hear that average annual bonuses have increased by 33%, you can be rest assured it was A, a very good year, and B, this was when Wall Street was not firing on all cylinders just yet. Remember, deal-making, mergers and acquisitions and IPOs are not back to where people would like to see them at. So there's still more room to run. If that also catches fire, it could be a real good payday for a lot of people across Wall Street.
This was the best payday since record keeping began in 1987. And I'm going to go ahead and say that was a horrible year for bonuses. But profits more than doubled. So it's like they're not even taking really their fair share of the pie, if you look at it like that.
Right. And again, we are talking about the bonus numbers here, but the underlying aspect of how it also helps the city and state is also extremely important. Tax revenue for the city increases by roughly $275 million is the prediction. For the state, by up to $600 million. Wall Street contributes a fifth of the tax revenue for the state. For New York State, not the city, for New York State. So it is a big contributor there. This is at a time when New York's contribution to the overall financial services industry employment pool is now down to under 20% from, say, roughly 33% in 1991. So as the economy grows, even if you don't have as many people in New York, this is still an industry that makes a lot of money, and the tangential effects are plenty.
Is it still, you know, Paul Sweeney over on Bloomberg Radio actually started out on Wall Street in 1987. And he will always say if he didn't get a good enough bonus, that's fine. He would take the elevator down, go out the door, cross the street, and get a job at the bank next door. Is this still that industry?
Looks perhaps not as easy as that, or at least not as easy as Paul makes it out to be. Paul could do that in any market. He could have done that in 1987. He could have done that in 2001 and 2008. But for most people, it's perhaps not that easy. But there are pockets of the industry where the war for talent is really intense. For those people, that is a very realistic option. Absolutely.
I thought, though, we were seeing the likes of Citi, for example, cutting back on some of their bonus programs. Some of these other banks doing that. Is that just something that's very unique to this year, and perhaps the disappointment that it didn't get off to as good of a start as we expected?
Look, in the case of Citigroup, you've picked a bank with a real serious idiosyncratic...
The biggest underperformer on the street.
They are dealing with their operational issues. The bonus cuts we're talking about are tied to a very specific issue, where special bonuses, that does not affect the entire company, but a few of the senior managers. But when you look at actual underlying performance, Citigroup, much like every other bank, at least their Wall Street operations, did reasonably well enough to make sure that their bonus pool was going up last year.
Sri, great to have you on. Always great to talk about Wall Street bonuses. Sridhar Natarajan there covers Goldman and the big banks for us on the other side of the building. Still ahead, UPS is rolling out a tariff math tool for customers in hopes of minimizing sticker shock. Details on that next. This is Open Interest.
All right, let's look at some social climbers. The company's making waves this morning. First up, the mobile game company Playtika is getting a double upgrade at Bank of America. The firm is highlighting the unusually high free cash flow and says the company offers the highest profitability within the industry. Next up, let's look at Rivian, spinning out a new company that will make small EVs designed for short trips. The new so-called Micromobility company will be called also ALSO, and it will aim to launch a consumer product this fall with deliveries starting next year. Finally, let's wrap things up with UPS. They are launching a new tool. This one's interesting for online shoppers so that they can see the added cost of tariffs. The new service will calculate and guarantee the cost of any levies on products at checkout. The offering aims to address the problem of buyers being surprised with their international fees when their package arrives. Matt, I kind of don't even know how they're going to do this because tariffs seem to change every single day. That's going to be a lot for whoever maintains that website.
It'll definitely be, although you know what, you could easily set up an algorithm that just follows the actual orders that customs gets. Because when President Trump announces these things and puts them into function, he just basically sends something to Customs and Border Patrol, and they just automatically enter it into the system. So,
but like, is this going to help customers? I feel like this would be bad for UPS. If you're about to check out and you're like, oh, my thing's more expensive because of tariffs, maybe I'm just not going to buy it. Whereas if it was just kind of integrated, you could be like, maybe it was always this way.
Yeah, or maybe it's not as bad as you expect.
Yeah,
I recently bought something from London and I wanted to return it. And they said, listen, let us just refund you half the money and you keep the item, because they're afraid of tariffs. And there aren't even any tariffs on anything under $800.
You're going to need to give me the name of that company so I can buy a few things.
All right, let's get a check on what's going on in the markets right now. We're basically an hour and a half into the session, and we're looking at a drop of 0.4% of 1% right now. S&P 500 trading at 57.52. The NASDAQ is down more sharply, more than 1.1%. That's because of the drop of NVIDIA. Remember, NVIDIA is worth 6% of the S&P, but it's worth 8% of the NASDAQ. So a much bigger weight on that index, still holding over 20,000 at 20,060. The 10-year yield rising 4 basis points, potentially on concern about those copper tariffs. A Bloomberg scoop that copper tariffs could come sooner than anticipated. President Trump talking about tariffs more on Newsmax, and I think investors are putting that timeline together. So you're seeing the 10-year yield slowly march back higher. We had been down at a very comfortable and chill 420 level, and now we're back up to 435. Coming up on this program, Citi is giving the thumbs up to International Paper's Investor Day. The stock has been on fire. We'll speak to Andrew Silvernail, the CEO of International Paper, next. This is Bloomberg. All right, I want to pull up one of my favorite terminal functions, and if you watch the show regularly, you'll know that that's the comp function, C-O-M-P, go. If you do it on IP, on International Paper, and run it out a year, you can see that the company has trounced the S&P, 51% total return, the broader index only 12%. Citi also just maintained its buy rating on the stock after the investor day earlier this week. So analysts like it as well, even at these levels. Joining us here in the studio is the company's CEO, Andrew Silvernail, International Paper. You know, Andrew, I have to say, I was talking about this with producers and with Danny earlier, and a lot of the kids mentioned Dunder Mifflin, right? I also Googled paper usage, and obviously the chart, you know, goes down. But you're not making the kind of paper that we write on at school as much as you are packaging.
That's exactly right. And by the way, my kids have fun with that too. No, we're a packaging business, and obviously paper is in our name, and it's you know, we are the 10th longest standing NYSE company, which is amazing. But we're a packaging company today, and what I like about that, it's differentiated and it's all about sustainability.
So with that, I know you've took over as CEO maybe about less than a year ago, and you've come in swinging with some really big transformation plans. What is basically the biggest priority for you going forward?
Actually, I'd say there are two things. The first one is you got to be customer facing. You really have to listen to your customers. If you think about the problems that they're trying to solve in terms of getting their goods to their customers, that's what we are all about, problem solving. So getting customer facing is number one. Two, with that is how you think about where you put your resources, your people and your investment. You have to align with your customers. You got to focus on the things that matter most, and you got to move things away that don't.
You mentioned sustainability. I see that Ethisphere chose you as one of the most ethical companies. Does that still matter?
It
Do
does.
those things still matter?
They do matter. They do matter. If I think long term, so think a decade from now, do we think we're going to be acting in a way that's more sustainable or less sustainable? Well, we know we need to act more sustainable. Everything we do in the economy to connect to that circular economy, I think it matters. And I think ethics really matter. I was talking offset to one of the folks here at Bloomberg, and we were talking about trust and performance. And I think when you combine trust and performance at the same time, you build a great organization.
Andrew, I feel like you have a really good pulse of how corporations are feeling out there, just considering the breadth that you deal with. There has been this thought that some companies are starting to pull back, that at least some of the softer data shows concerns among consumers. Are you seeing that at all? Has there been a shift to start this year?
There has, and I think we have to be fair about that. We see that in our data, you see it in the consumer data that's coming out, but it's not something I'm worried about long term. I think for us, we make decisions in decades. If you think about building a mill or building a box plant, or those relationships you have with the customer, those are decades long. We have to think that way. Yes, there's some turmoil right now. There will be some turmoil right now. We're seeing it in our numbers, but we'll push through it.
So the tariffs, you know, that were first announced on Canada and Mexico had to be a shock to you as well. And now we're looking at, obviously, additional tariffs on China and potentially reciprocal tariffs against Europe. How does that affect your business specifically?
Well, it does in some ways and it doesn't in others. And so we don't do very much that actually goes across borders. There's very little of ours that go across borders. But it does impact the overall economy, number one, and it does impact supply chain in terms of inflation coming up. So we're watching those two things, what's happening to the economy and what's happening to inbound inflation.
Well, on that point, because you mentioned you have to build steel mills, and these are projects that take time and money. As a CEO,
build paper mills.
Paper mills, yes. Sorry, paper mills.
Lots of steel
mills. Steel mills. That would be interesting. That'd be really. I know that's not included in the transformation plan. Paper mills. Thank you, Andrew and Matt. As you're building more paper mills, do you look at the current set of uncertainties? And do you delay CapEx at all? How do you think about spending right now?
We are not. We are not delaying CapEx. Actually, when you asked about the biggest things we have to focus in on, those two things around focus on the customer and getting our asset allocation correct, we're actually going to be spending money. We need to and we have to because we need to be closer to our customers and we need to be world-class in terms of cost and service.
We spend so much time talking about the negative impact of the things the Trump administration has done so far, and I joke about sustainability and ethics, but he also the president wants to reduce regulations. He wants to reduce taxes, especially for companies that make stuff in America, which IP does. And I suppose tariffs on foreign products coming in can only help you since, you're building stuff here. So do you see some positive fallout from Trump 2.0?
Well, I think as we focus on the long term, I think that's really the case. We got to focus on 10 and 20 years. Tariffs have a place in the world economy. I think a free trade economy is a good economy over time. And I think getting the playing field correct, getting the playing field right, we'll thrive in that. We'll make investments around winning in our local markets, winning for our customers, helping them get their goods to where it needs to be, and IP will succeed in that environment.
How much of this are you able to incorporate into your outlook at this moment? Is it when you give numbers to the financial community, are you including these differences in the macro environment, or do you kind of hold off until we get more clarity?
You know, it's a little bit challenging. Yesterday, we told our investors we thought we'd be somewhere between $3.5 and $4 billion of EBITDA. I think the downside to that, so if they pick a midpoint, the downside is probably weakness in the economy in the short term, and the upside is, I think, relief in there. So in the short term, it matters. In the long term, I don't think it does.
I have a Tom Keene question here.
Oh, please do.
Chair Greenspan apparently tracked corrugated box production as an indicator of the health of the economy. How's it look? How's the economy look from that perspective to you?
I tell you, outside of kind of the little bit of craziness in the last 4 to 8 weeks, it's been pretty healthy, both in really in the U.S. Europe's been a little bit weaker. Our expectation is that over time that will take care of itself, and the underlying business. Actually, Greenspan was right. We actually track the economy really well in both markets, and we pay attention to that too.
Very cool. Great to have you here on set with us, Andrew. You'll have to come back. Andrew Silvernail, there, the CEO of International Paper. Let's take a look at what the markets are doing. An hour and 6 minutes into the trade, we see red arrows across the board, and the NASDAQ getting hurt a little bit more than the S&P, but coming well off session lows. The NASDAQ down now almost 1%. The S&P 500 down 0.3%. It's not being helped by most of the Mag 7 companies. In fact, Apple is the only one of the Magnificent 7 companies that's trading in the green. green and only just. The 10-year yield, you can see, continues to rise. Investors sell that debt, 434.61, going out 5 significant digits for Tom Keene.
I almost thought you were wearing a bow tie with all of that. Anyway, let's take a look at some of the stocks that are moving underneath the surface this hour with Bloomberg's Alex Semenova. Alex, kicking things off with Boeing this morning. What you got?
Hey, Danny. Boeing has been ordered by a federal judge in Texas to stand trial on June 23rd. This is in the criminal case related to the deadly crashes of its 737 MAX jets back in 2018 and 2019. The company has previously sought leniency with the U.S. Justice Department, but a plea deal was actually rejected back in December. So this is a significant development here in determining whether Boeing is culpable for these crashes that killed, of course, 346 people. Shares are down just a tad this morning, but they're actually up 3% on the year, outperforming the broader market. I'm also taking a look at Dollar Tree. That company is offloading its family dollar chain for about $1 billion to Brigade Capital Management and McCallum Capital Management. The deal is set to close next quarter. This comes a decade after buying the business, actually for $9 billion. So selling it at a significant discount here. And this is actually a disappointment in its effort to establish itself as a dollar store giant, given the fact that about half of its stores will close after this deal. Though this is being offset by some pretty solid earnings. Shares are up more than 4% today, but down 7% on the year through yesterday's close. And then last but not least, of course, taking a look at Tesla, which is sliding today after 5 consecutive days of gains. It's obviously been a brutal stretch for the electric vehicle maker as investors worry about growth prospects and also that Elon Musk is distracted by his White House duties. The stock is down about 30% this year, and actually next week is going to be a significant catalyst for the company, given it's set to report deliveries around April 2nd, right on tariff days, actually. So it's going to be an eventful week.
Liberation Day. Alex, thanks very much. Bloomberg's Alex Semenova there talking to us about some of the movers. Coming up, Wall Street bellwether Jefferies reports results after the bell today. We'll have a preview next. This is Open Interest.
Jefferies, a Wall Street bellwether for investment banking activity, reports results after the bell today. Neil Saps, financials analyst for Bloomberg Intelligence, joins us for a preview. And Neil, we are at this point at a very different place than we thought we would be to start the year when it comes to bank and banking activity. What's the expectations for Jefferies?
Yeah, and I think you highlighted it well, that we're at a very different place that maybe we started the year at. The expectations for 2025 were a pretty sizable capital markets rebound, really led by M&A after a handful of years that were pretty slow, especially after a record 2021. Where we are today, obviously, we've had a serious introduction of volatility into the market. The first couple of months, January and February, we saw deal activity down 20%. March has been a little bit better, surprisingly, just given the introduction of volatility. So what we're going to be looking at with Jefferies today is how have those trends played out in the first handful of months this year, and what's the ultimate outlook for 25 and beyond with this sort of new regime of potentially higher volatility and everything that we've seen.
In terms of the M&A market, how has the advisory business at Jefferies performed, maybe specific to that country, and what's then the broader outlook for 2025? I mean, it's been a slow start, we know. We were talking with Crystal C about, deals thus far. Danny pointed out it's been kind of a drip feed, but what's the outlook for the whole year?
Yeah, and I think that's right. And Jefferies is a bit unique in this scenario when you stack them against some of the largest players. Jefferies, the story behind them has been significant hiring at the senior level, managing directors. So when you look back at 21, I mentioned that was a record year. Their headcount's up almost 50% from that level. So you simply underwrite a sort of normalized M&A environment. The revenue run rate, the earnings potential for this company is significantly higher than it was in the past. But nonetheless, you still have to have a generally normalized M&A market, which we haven't necessarily seen since. So with that being said, they have significant market share potential relative to some of those larger players, and that's been a story for Jefferies for a long time.
Matt and I were talking earlier in the show about how the New York comptroller was reporting record bonuses for the banking industry last year.
Over $47 billion, the Wall Street bonus pool.
It's a really remarkable amount, even considering just how much better they did during COVID, for example, at this period. And if we're going to something that looks like normalization, does that mean that the payout for talent, the remuneration, the war for talent, and the ease of getting new jobs will also be normalizing?
Yeah, I think that it is tough to say, 2.5, 3 months into the year, what the whole year is going to look like. We know seasonally the second half is stronger as well. So everyone's going to be holding their breath for a, potentially better second half than first half. But ultimately, yeah, you're going to have to be watching how the deal activity trends throughout the year. Obviously, compensation is the largest piece of expenses for all investment banks. Ultimately, that is going to reflect the revenue environment, so there is some protection to profit there. When you have revenue drawdowns, you can sort of obviously pay out less in bonuses, as you noted. When revenue increases, you're obviously going to be going the other direction. But ultimately, there is operating leverage in that business. And that's why when we see periods of rising revenue, which was the expectation for 2025, there were some pretty sizable margin expansions underwritten in these investment banks.
If I look at the KBW index, BKX index on the Bloomberg, it's a bank index, modified cap-weighted index, 24 exchange-listed Wall Street companies. It's had a great run lately, but it's only sort of catching up to where it was at the beginning of the year. What's the outlook in general for the industry that you cover?
Yeah, and so I guess, capital markets may be a fairly small component of some of those banks at that index. What we're looking at here is very capital markets oriented. Jefferies is not necessarily a bank. It's not taking deposits. It's not making loans. So everything that they're earning is generally from the fees on advisory, from underwriting to M&A. To equities and fixed income trading. So ultimately, it's going to be heavily capital markets oriented. How are institutional clients, strategics, corporates, private equity sponsors, how are they transacting? How are they viewing at 25 and 26 from now? And how is that going to influence their activity moving forward?
Neil, great to have you in here.
Yeah.
We both appreciate it.
We both certainly do, and I'd be interesting to see what Jefferies comes out with. Neil Saps of Bloomberg Intelligence. Coming up, copper tariffs may come sooner than expected. We're going to get the latest out of Washington, D.C. next on Open Interest.
The Atlantic has released the transcript of a group chat between top U.S. officials on Signal that inadvertently included its top editor. Joining us now is co-host of Balance of Power, Kayleigh Lines. And Kayleigh, this is a story that I imagine everyone in Washington is focused on. But I think the broader question is, will there be any fallout, or is this just going to be a typical sort of Trump story that goes out of the news cycle in 24 hours?
Well, a lot of that depends on the decision-making of the president himself, too, who this point, Matt, at this point, is still, as of this morning, even after the publication of this full Signal group text chain, has said he's standing by his team, that it was, yes, a mistake that this journalist was inadvertently added, but because the attack against the Houthis went off perfectly in his mind, that no harm was actually done here. That said, what we were hearing from the administration yesterday about the notion that no plans were actually shared, that there was no classified information on this group chat is what the releases today put into question. The Atlantic had decided not to release all of this material on Monday due to national security concerns, but has now done so, detailing in full what the Defense Secretary Pete Hegseth posted at 11:44 a.m., which included specific times, specific military aircraft like F-18s or Reaper drones that were to be used to strike at different time periods, even mentioning a terrorist target at his known location. Now, what we're hearing from the administration is that this does not constitute quote-unquote war plans, as the Atlantic initially characterized, though a specific attack was mentioned. And we're seeing, once again, officials who were on this group chain, the Director of National Intelligence, Tulsi Gabbard, and the CIA Director, John Ratcliffe, facing a second day of questions from members of the House Intelligence Committee after testimony in the Senate yesterday. That, no surprise, is getting pretty dicey, as the ranking member on the Intelligence Committee, Jim Himes, is suggesting that it's only an act of God that kept American pilots from dying as a result of this breach.
So, Kayleigh, if Trump is sticking by his team, are there any real consequences? Are there any mechanisms to have there be things like Pete Hegseth, for example, be forced to step down? Is there any other thing, be it the Senate, be it some of these lawsuits that are popping up, that could have that type of consequence, or does it all come down to Donald Trump?
A lot of it comes down to the decision-making of the president and whether he would request or accept a resignation letter from any of the individuals involved, be it Pete Hegseth or Mike Waltz, who, of course, claimed accountability and taken personal responsibility for starting this chain in the first place. We could see congressional investigations into this. Obviously, there is the testimony happening today, but we've also heard from the Armed Services Chairman in the Senate, Roger Wicker, a Republican, who has suggested he would like an inquiry. But it's unclear where that would actually lead, keeping in mind that there are Republican majorities in both the House and Senate who, by and large, stay in lockstep with President Trump. And if President Trump is signaling he does not want his people to go, it is seen as highly unlikely that anyone would cross him on that. I will say, you mentioned lawsuits, Danny. We did see a liberal group, American Oversight, filing a lawsuit against some of these officials yesterday over essentially the records acts that bind officials, because some of these messages and signal were set to automatically delete, which they argue is in defiance of laws that require officials to keep records of their communication. So we could see some of this playing out in court. But by and large, the administration is really just hoping that this story eventually leaves the news cycle and they can move on to other things without any heads actually rolling.
Well, that's leaving the news cycle does really seem unlikely, considering the scope of what's been released. I mean, you can tie this to stories like Bradley Manning or Scooter Libby, right? Have any American lives been put at risk here? Have we seen any, CIA outings like Valerie Plame? Have you seen anything like that in this Atlantic release?
No, and I would point out, Matt, that the Atlantic still chose not to release the name of the CIA operative that the director, John Ratcliffe, had named as the person who would be his touch point for these conversations after a request from the CIA not to do so. That said, and what we are hearing from the administration is that there was no harm done here, that all of these attacks went successfully, they were not thwarted, and everybody got out safely. But what I've been hearing from people close to the intelligence community, others here in Washington who have worked in prior administrations and are familiar with security protocol, is about the future national security risks that it could pose. Given that Signal is not a completely, fully 100% secure platform, it is still vulnerable to hacks from American adversaries like Russia or China. Also keeping in mind that this may call into question allies who intelligence share with the U.S., the so-called Five Eyes Alliance, for example, thinking of countries like the UK and Canada and Australia. Their fear is that it may cause other countries who provide the U.S. with valuable information to second-guess doing so because of concern over whether or not the channels are secure and whether that information will actually be contained. So what we're hearing from people who are upset by this episode is more about the longer-term risks, what it could jeopardize in the future, than necessarily what happened with this particular episode.
Balance of Power, as everyone knows, is my favorite program. Kaylee kicks off on Bloomberg Television at 1 o'clock. You're also on again, I believe, at 5 o'clock. What have you guys got planned for today?
Well, we're going to have to talk about tariffs, as well as the administration is now at least considering, according to Bloomberg reporting, front-running copper tariffs, perhaps in the next couple of weeks rather than a couple months, which obviously for anyone looking to get their hands on physical copper in the immediate term and import it before those kick in could throw a little bit of a dent into those plans. We also have to talk about the Congressional Budget Office, which released today its estimate for the X date when the U.S. is at risk of defaulting on its debt. They say that could be as soon as August, though a lot of that is going to depend on ultimate tax receipts. They warned of the risk that you could see something in May or June if the money coming into the Treasury's coffers is lower than they currently estimate. All of that figuring into the tax debate that is still ongoing on Capitol Hill, guys.
All right. Kaylee, thanks so much for joining us. Balance of Power co-host Kaylee Lyons there. Coming up later today, we've got an exclusive interview with Democratic Senator Elizabeth Warren of Massachusetts. She's more than likely going to have something to say about this as well. Let's get a quick check on markets here. An hour and a half into the trade, we are looking at red arrows across the board, but well off session lows. The S&P 500 now down only 0.3%. Coming up tomorrow on Open Interest, Morgan Stanley's Mike Wilson joins us. We've also got Bob Sloan of S3 Partners and the founder of Porsche backdater Singer. I think they'll argue that it's much more than that. Rob Dickinson joins us, formerly of Catherine Wheel, and the CEO, Raj Nair, formerly of the Ford Motor Company. I'm very excited about that. This is Bloomberg.